Now in today's video, I'm going to share with you guys a very simple yet effective 3 ETF portfolio that's basically going to solve for most everything most dividend investors are seeking. The 3 ETF portfolio is going to be equally split between ticker symbol IYRI, SCHD, and QQQI. $5,000 each for $15,000 total invested into each one of these 3 different ETFs that offer very different things. So what we're going to do is break down every single one of these 3 ETFs. I'm going to share with you guys what I like about them specifically and why they each could be a good part of this 3 ETF portfolio that's going to offer some growth exposure, some dividend growth, a ton of income generation from day one, and a ton of tax efficiency. Then later on towards the end of the video, I'm going to share with you guys what this 3 ETF portfolio that has a total worth of $15,000 would generate per year in dividend income, and it's probably going to shock you. So if this sort of thing interests you at all, make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. So the first of the 3 ETFs in this 3 ETF portfolio that, like I said, is more or less going to solve for most of what most of us dividend investors are seeking, which is dividends, dividend growth, some growth exposure, and of course tax efficiency, which is amazing. SCHD is going to be the part of the portfolio that's going to offer still some income around a 4% starting yield. So it's not like this ETF doesn't offer anything. But this ETF is going to offer a lot more growth exposure than the others, which could potentially have the portfolio grow over time. But not only that, SCHD offers a ton of dividend growth, or at least it has historically. Now, the objective of SCHD is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. This index is made up of 100 different holdings, more or less, single dividend stocks that have been consistently growing their dividends over time. And like I mentioned earlier, a starting yield of around 4% gives investors a decent amount of cash flow right off the bat. Now, I personally use SCHD as a foundational position in my long-term portfolio just because it does offer exposure to high-quality holdings for a very cheap expense ratio of 0.06%, but also this ETF has been growing their dividends consistently, around 11% per year over the last 13-14 years straight. Now, even though the Schwab US Dividend Equity ETF is a great ETF and I hold a ton of it in my portfolio, I would never only want to hold onto this name just because as a dividend investor, I want to earn a little bit more cash flow right off the bat. Which, speaking of cash flow, that brings me into the second position in this 3 ETF portfolio. It's going to be ticker symbol IYRI. Maybe you guys have or haven't heard about this one, but it's the NEOS Real Estate High Income ETF. Now, real estate investment trusts, or REITs, have been very popular in the dividend investing community for several years, probably even several decades, but as of recent, more than ever, with all these different funds coming out offering a ton of return of capital, a lot of investors, including myself, are second guessing buying a lot more REITs just because they aren't necessarily all that tax efficient. Now, the cool thing about this ETF that's brought to us by NEOS is that it buys into REITs, or real estate investment trusts, but then with that utilizes a data-driven call option strategy, so basically utilizing option trading and REITs all in one single fund. Now, that's exactly why an ETF like this one has the potential to pay around a 12% yield. I mean, even though there's some good high-yielding REITs in this portfolio, there's absolutely no way whatsoever that these names would ever pay around 12% yield. But the cool thing about real estate investment trusts and why I personally like having exposure to them is that they do offer a nice amount of yield right off the bat, but especially when coupling this with options trading, we're talking a 12% yield, which is amazing. But it actually even gets better than that if you look at the supplemental tax information for this ETF, again, that holds onto REITs. And if we look at the most recent distribution, which was around 48 cents per share per month, it says right here that it's anticipated 94% of such dividend will be return of capital. So the NEOS Real Estate High Income ETF, or IYRI, is one of the first ETFs that I've came across in recent time that's offering high quality real estate or REIT exposure, but also offering a ton of return of capital, which as an income-oriented dividend investor is definitely a bonus. Now that brings me into the last final ETF in this 3 ETF portfolio that, like I said, is going to offer a ton of income generation, some growth, some dividend growth, and is going to be very tax efficient. The last ETF in the bunch is going to be one of the fan favorites, actually just won an award on ETF.com. It's the NEOS Nasdaq 100 High Income ETF, or ticker symbol QQQI. This ETF offers a 15+% distribution rate and offers you NASDAQ 100 exposure with an option strategy, which is how it offers such a high yield. Now, the investment objective of this one is high monthly income in a tax-efficient manner with the potential for equity appreciation, which this ETF has done very, very well since inception. It pays around 60 cents more or less per share per month, and just like you guys probably guessed, it offers a ton of return of capital just like the last one. So by building a very simple 3 ETF portfolio that offers very different exposure throughout the market, I mean, QQQI is going to offer you NASDAQ 100 exposure through a high income strategy. IYRI is going to offer you real estate high income exposure and allow you to get your hands on some of the best REITs across the market, but through an option high income strategy. And then lastly, SCHD is going to offer something totally different also. It's going to offer some more growth potentially long term and to offer you a lot more dividend growth every single quarter, hopefully. Now, I say all that to say that if we did equally purchase $5,000 worth of SCHD, $5,000 worth of QQQI, and $5,000 of IYRI, 3 ETFs that I personally hold in my portfolios, and 3 ETFs that I do believe in long term. With SCHD, we're talking around a $200 annual dividend amount based off of the most recent dividend, which again historically has went up and up and up. QQQI, based off the 15% yield, the $5,000 invested, will give us around $750 per year, and then lastly, IYRI, the real estate one, will give us around $600 per year in income. So based on this $15,000 portfolio, which has the potential to compound a lot, in my opinion, depending on what happens in the market, of course, this $15,000 portfolio in total would pay you around $1,550 per year in dividends, and again, you are getting a lot of exposure to dividend growth in this portfolio from SCHD. Now, are there other ETFs across the market that can pay you a lot more annual dividend income? Potentially at least, of course there are. But as far as quality goes, which definitely matters to me as a long-term investor, because who wants to get paid dividends and experience massive NAV decay? This 3 ETF portfolio could offer you high quality exposure to different assets, but like I said, offer you a nice amount of almost everything else most dividend investors are seeking. So there we have it. I just wanted to share with you guys a very simple 3 ETF portfolio, $15,000 in total, $5,000 invested into each of 3 of my favorite ETFs as of right now across the markets. Now, with all that being said, I do have a question for you guys down below. Out of these 3 ETFs, if you for some reason could only pick one of them to buy into and hold, which one are you picking? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.